Have you ever wondered where the average American really stands financially in 2026? Not the flashy headlines, not the richest 1%, not the worst-case horror stories, but the typical person. Today we're taking a hard look at the most important money statistics of the year so far, and by the end, you'll know exactly how you compare to the national average. Let's start with the big picture. Household wealth and debt. In the third quarter of 2025, U.S. household net worth reached a record high of around $181.6 trillion, driven by gains in stocks and real estate, even as real estate values dipped slightly and debt climbed. Despite that enormous figure, millions of Americans still struggle with financial security on a personal level. Federal Reserve. One striking fact about everyday finances is debt. Total household debt sits well above $18 trillion, including mortgages, auto loans, credit cards, and student loans. On average, American households carry roughly $100,000 or more in debt, and for many, that number feels heavier than ever because interest rates on credit cards and other variable rate loans remain high. Federal Reserve. Experian. Now let's talk income and savings. The median household income in recent years hovered around $80,000, though that doesn't account for inflation or regional cost differences. Most Americans are finding saving to be a challenge. The national personal savings rate has been under 5% of disposable income, reflecting that many people are simply trying to keep up with everyday expenses. In fact, surveys report that nearly 2 in 5 Americans couldn't afford an unexpected $400 emergency expense without borrowing or selling something. Yahoo Finance. Statista. Yahoo Finance. Emergency savings are a major issue too. A recent Bankrate report found that about 1 in 3 Americans has more credit card debt than emergency savings, which means many households are one small crisis away from financial stress. And while some people are prioritizing both paying down debt and boosting savings, the majority are still stretched thin. Bankrate. Let's dig into retirement savings. Something most of us think about, but many aren't prepared for. Across all age groups, retirement balances vary widely. Some older Americans have decent nest eggs, but many do not. Data show that a large portion of Americans have only modest amounts saved for retirement, and fewer than 5% of people have over $1 million saved in retirement-specific accounts. Millennials, who are now deep into their earning years, have significantly less saved than older generations, with average 401k balances far below their parents when they were the same age. Investopedia. Investopedia. We also have to talk about net worth, the difference between what you own and what you owe. The average American household net worth is skewed high by wealthy Americans, but the median net worth, the number that actually represents the typical family, is much lower. Recent Federal Reserve data suggests that average net worth may exceed $1 million on paper, but the median, the point where half have less and half have more, is closer to $190,000. This gap highlights how wealth inequality affects our view of the average American. Yahoo Finance. Those numbers raise a question. How do you compare? Do you have emergency savings above $1,000? Are you contributing regularly to a retirement account? Are you paying down high-interest debt? More importantly, do you have a financial plan for the future? Surveys show only a minority of Americans have a long-term financial plan in place, even though financial stress is a top concern going into 2026. Fortunately, so here's the bottom line. Despite monumental total wealth in the U.S., many Americans are living paycheck to paycheck, managing debt, and saving less than experts recommend. Income levels have grown modestly, but inflation and expenses have kept savings rates low. Emergency funds are often thin, and retirement savings vary widely by age and income. The statistics we looked at today reveal not just numbers, but real financial stories that millions of people live every day. Now we want to hear from you. How do you compare to these averages? Drop a comment below with a number you're proud of, whether it's savings, debt reduction, or retirement progress. Remember, the average doesn't define you, but it's a great benchmark to help you grow. If you found this video useful, like, subscribe, and share with someone who needs a financial check-in. Thanks for watching, and here's to your financial progress in 2026. Host. By 2026, money feels different in America. Prices are higher, paychecks don't stretch like they used to, and everyone seems to be asking the same question: am I doing okay, or am I falling behind? Today we're breaking down the real money statistics of the average American in 2026, not to scare you, but to give you clarity. Because once you know the numbers, you can finally see where you stand. Visual: fast-moving clips of grocery prices, gas stations, rent listings, and people checking their phones at checkout. Host: let's start with income, because everything else depends on it. In 2026, the median household income in the United States sits around $80,000 a year. That sounds solid on paper. But once you factor in taxes, healthcare, housing, food, insurance, and transportation, that number shrinks fast. For millions of Americans, the paycheck covers the basics, and not much more. Visual: paycheck graphic shrinking as bills stack up around it. Host: and here's the part most people don't realize. Income has gone up compared to a few years ago, but expenses have gone up faster. That's why so many Americans say they earn more than ever, yet feel poorer than ever. Visual: split screen. Rising income line versus faster rising cost of living line. Host: now let's talk about savings, or the lack of it. In 2026, the average personal savings rate in America is under 5%. That means for every $100 earned, most people save less than $5. Even more shocking, nearly 40% of Americans still say they couldn't cover a $400 emergency without borrowing money. Visual: emergency expense alert pops up on a phone screen, followed by a stressed reaction. Host: that means a flat tire, a medical bill, or a home repair can instantly turn into debt. And for many households, savings simply don't exist. About 1 in 4 Americans has less than $1,000 saved total, not for retirement, not for investing, just overall. Visual: savings jar with only a few coins at the bottom. Host: speaking of debt, this is where things really get intense. In 2026, total U.S. household debt is well over $18 trillion. Mortgages make up the largest share, but credit cards are where people feel the most pain. Average credit card balances have climbed, and interest rates remain brutally high. Visual: credit card balance spinning upward with an interest rate warning flashing. Host: the average American household now carries tens of thousands of dollars in combined debt. Between credit cards, auto loans, student loans, and buy now pay later plans, debt has become a normal part of life, not a temporary problem, but a permanent companion. Visual: a character walking with heavy chains labeled debt. Host: auto loans are another silent budget killer. The average monthly car payment in 2026 is higher than ever, and many Americans are locked into 6 or 7-year loans. That means people are still paying for cars long after the excitement is gone, while maintenance and insurance costs keep rising. Visual: car driving away while payment counter keeps ticking. Host: now let's talk about housing, because this is where the biggest divide shows up. Homeowners who bought years ago often sit on significant equity. Renters, on the other hand, are facing record-high monthly payments. In many cities, rent alone eats up 30 to 40% of household income, sometimes more. Visual: split screen. Homeowner smiling versus renter opening a high rent bill. Host: because of this, homeownership feels impossible for many Americans under 40. Even with decent incomes, saving for a down payment while paying high rent is like running uphill on a treadmill. Visual: person running on treadmill labeled rent plus inflation. Host: now let's zoom out and look at net worth, the difference between what you own and what you owe. The average American household net worth is over $1 million. But don't be fooled by that number. It's heavily skewed by the ultra-wealthy. Visual: one giant bar representing the rich pulling the average upward. Host: the median net worth, the number that represents the typical American family, is closer to $200,000. And much of that is tied up in home equity, not cash. That means many households look wealthy on paper but are cash poor in real life. Visual: house icon labeled equity, with empty wallet beside it. Host: retirement savings paint an even clearer picture. In 2026, most Americans are behind where financial experts say they should be. Millions have retirement accounts, but balances are often modest. Fewer than 5% of Americans will ever reach $1 million in retirement savings. Visual. Small retirement account balances compared to a distant finish line. Host. For younger generations, retirement feels abstract and far away. Many millennials and Gen Z workers are prioritizing survival, rent, food, debt, over long-term investing. And while that makes sense emotionally, it creates serious problems later. Visual. Young worker choosing between bills and retirement icons. Host.